In today's video, I am going to share my top 10 favorite dividend growth stocks of all time. You guys know that I own 38. You know that I'm thinking a lot about my favorite stocks of all time right now because 2019 is going to be all about building my core. I'm literally in 2019 going to focus just on my top 10 stocks, and I want to really focus on building my core. I'm going to get more to that in a minute, why that is, but I want to take the opportunity today in one single video to share all 10. In fact, I've been doing a lot of videos recently about my top stocks. I'll link in the description below. I've gotten through 1 through 6, but this took a while. A lot of times it was a difficult decision picking one or the other, but now as I'm at 7 through 10, I just was driving the other day. I drive a lot for my job. I'm a commercial real estate developer, and I was just thinking, I'm like, hey, Ian, you just got to do it. You got to do it because one, you need to figure out your top 10, but two, wouldn't it be nice if you could get a jump start on your 2019 right now in 2018? And so I'm really excited. I think some of these stock picks, they're really going to surprise you. They surprised me. But at the end of the day, it all makes sense. And so this is going to be a really cool video, really fun one. By the way, as you're watching this video today, please go to the comments below, share your favorite stocks, your favorite dividend stocks, your favorite top 5, top 10. This is a community. We are all here as dividend growth investors. We are 16,000 strong. So let's share with each other. Let's share all of the great comments and really see which ones are the favorites in the community. But today, you're going to see my top 10. I'm really excited, so let's get started. All right, everyone, you know my number one biggest position in my portfolio, favorite company, Johnson & Johnson. These guys, I love them because their business spans drugs, consumer products like this. This is the first aid on the go, and medical devices. J&J, big diversified healthcare company. Doesn't get more interesting than that, at least from a dividend investor standpoint. These guys right now are not really sporting a very high starting yield. They're currently trading at $145. The dividend per share per year, they pay it quarterly, but summed up all the quarters is $3.60. The starting yield right now is a 2.48%. 2.48% starting yield for J&J doesn't get me too excited. I'm waiting for the share price to drop a bit to add to my position. That said, this list does not take valuation into account. This is my top 10. These are my favorite stocks. These are the stocks that form the core of my portfolio, the foundation. I have to pick the best stocks, the best quality stocks. And so current valuation doesn't factor into it. These are my favorites. The 5-year dividend growth rate for J&J is 36%. So they've grown the dividend by 36% over the last 5 years. If they do that again for the next 5 years, the yield on cost will be 3.38%. Not that exciting. I feel like the stock is not maybe overpriced here, but certainly not a exciting time, not a discount, not a deep discount. So I love you guys, J&J. I'm waiting for a really good entry point. Anyways, my number 2, Pepsi, completely different than J&J. You'll see this as I go through my positions. As I formulate my top 10, they have to span all kinds of different industries, provide a ton of diversification, and these guys are healthcare. My number 2 is a snack food company. Pepsi, maybe most people think of them for PepsiCo, but that's actually just a smaller portion of their business. The lion's share of their business is snack foods through Frito-Lay, through Gatorade, through Quaker Oats, Tropicana orange juice, foods and snack foods. That's what these guys do. I love PepsiCo. Of course, they got beverages too, like Pepsi and Mountain Dew. They are sporting a 3.2% starting yield right now. 3.2%. They've grown the dividend in the last 5 years an astounding 63%. If they keep that up for the next 5 years, the yield on cost looking 5 years out is a 5.22%. I feel good about that. For a world-class company, core company, amazing company, best of breed, foundational, in my opinion, somewhat non-disruptable type of company like that one, I think a current yield of 3.2% and a projected 5-year out yield on cost, if they keep up their rate of dividend increases of 5.22%, not bad. So here I will probably start averaging into Pepsi on a monthly basis. Here's the thing, J&J in my portfolio is way up here. I got that at a good size, but Pepsi, bam, it drops down. I don't have enough money in Pepsi. It's not enough allocation. And so probably what I'll do is start averaging in monthly, but also I'm just strategically in 2019 going to save money. I'm going to have it on the sidelines, and when a sale comes along in Pepsi, I'm going to go for it. Hopefully a sale will come along in Pepsi at least once or twice during the year, during 2019, and I will jump on those sales. But regardless of those sales, at a 3.2% starting yield, 5.22 estimated 5 years out yield on cost, not counting reinvested dividends, I feel pretty good about that, and so I'll probably start averaging in, I don't know about 2018, but maybe, certainly in January of 2019, just because 2018, I also have to pay respect to the goals that I have for this year as well, which revolve around Procter & Gamble and Kimberly-Clark. We'll get more to that later, but I actually just purchased some more Kimberly-Clark today to try and finish out the year strong. Anyways, number 3 favorite dividend stock of all time is McDonald's. This is a real estate and restaurant company. I call it a real estate company because they have some of the most prime real estate around the world. And a lot of the time, even if they don't have an owned and operated store on that real estate, they own the real estate, they have a store on it that's been franchised, and they're the landlord. They have a landlord relationship with the franchisee. It's amazing, amazing business that they've got. It's all about hamburgers and real estate. Boy, is it priced to perfection right now. $185 price per share, 2.5% starting yield, and a 51% 5-year dividend growth rate. So starting yield is really low, growth rate is there. Looking 5 years out, if the growth rate continues, obviously, who knows if that will happen, I certainly hope so, it will be 3.77%. Right now, just from a dividend perspective, by the way, I'm just looking at yield now because I want to use dividends to pay bills. I've analyzed all these stocks in a lot more detail, looking at all of the financial metrics, but I'm just trying to keep it high level here because I got a lot of ground to cover. But basically, just on a yield position, I don't believe McDonald's right now is a very compelling value. I think it's priced very richly, and I'll just be waiting for a buying opportunity coming up around the corner, hopefully in 2019. If it does, I'll dip in. I'll get some more. Until then, I will just wait. So out of my top 3 so far, only would I say Pepsi is in a reasonable territory for buying. With J&J and McDonald's, they're a little too richly valued for me right now, at least from a buying opportunity. Number 4. My number 4 favorite stock of all time is a company called United Technologies, ticker symbol UTX. This is a diversified industrial. They own a bunch of stuff, including Otis Elevators. So they do a lot of stuff in the aerospace business as well. And you see a theme here. I'm trying to go across industries. I've got healthcare, snack foods, restaurants, real estate, and then I've got industrials. I've got to have an industrial in the top 5, and it's UTX. I love these guys. These guys actually, the current yield is only 2.24%. 5-year dividend growth rate is 37%. 5 years out, not looking at reinvested dividends, yield on cost is projected to be about 3.08%. I'll tell you right now I'm buying UTX monthly. The reason I'm doing it is because this thing is not a compelling value, but it is just too small. It is not where it needs to be. I'll tell you, Pepsi and McDonald's, Pepsi I'd like to see a lot bigger, but I've got a good allocation in both of those. But UTX, it's kind of low. And so I'm just adding monthly at this point. I don't think it's a really good value. I don't think it's a huge buying opportunity. I just have a baseline going to accumulate shares. I'm not putting a ton of money in it each month, but I just gotta have my eyes focused. I gotta keep focused on adding to that position, because if I don't, it won't get to where it needs to be, being my number 4 favorite of all time. By the way, I originally mentioned to everyone here, I'm going to share my complete stock portfolio at 100,000 subscribers. I got an early Christmas present for all of you. I'm going to share it at 25,000 subscribers. So I got 16 now. Bless you all. I love this community. I thank you so much, everyone who subscribed. Thank you. It really means a lot to me. I'm going to, at 25,000, share my portfolio. I'm going to share all 38 positions. I'm going to share the percentage allocation that I have in each. That will be very helpful, I think, because I'm thinking lately, a lot of these videos I do, without having that, well, with having that, it will make them a lot better. It'll make it a lot more helpful for folks at home who are following along, just to see, bam, there it is. and to look at my percentage allocations for each of these. But anyways, UTX, under allocated, gotta add to it, not a value, but I'm doing it anyways. That's number 4. Number 5 favorite dividend stock of all time is a consumer packaged goods company, a cleaning products company, kind of a hodgepodge company, Clorox. I love these guys. Most people think of Clorox for the bleach, and they are a world-renowned company for their bleach, but they also own a variety of cleaning products. They own Glad bags, Kingston charcoal. They own this. Rainbow Light Men's Energy Vitamins. Rainbow Light brand of vitamins is awesome. These are the gummies. They keep me really healthy. You can see here they come in these little packets, and I take these every morning. I love these things. And this was an acquisition, a recent acquisition of Clorox. They also own Burt's Bees, health and beauty products as well. So Clorox is trading right now at a starting yield of 2.43%. 35% growth rate of their dividend over the last 5 years brings the yield on cost to, not including reinvested dividends, simple yield on cost, 3.29% looking 5 years out. Not, again, that compelling of a valuation. I've actually got a good allocation to Clorox. I'd like to have more, but it's not like a United Tech situation where it's way too low. It's okay, so I don't need to add to this one until it's on sale. That's kind of how I'm thinking now, is J&J definitely don't need to add till it's on sale. McDonald's don't need to. Clorox don't need to. Pepsi, I kind of need to just keep adding to it because being my number 2, I want it to be real big. And thankfully, I think it's a value right now, a reasonable value, compelling starting value. UTX, way under allocated, just got to add to it. Anyways, that's Clorox, number 5 favorite dividend stock of all time. Love this company. So moving on to number 6. This one I just did a video about. Again, I'll link to all these videos in the description below. This one I think surprised a lot of people. It's Duke Energy. It's a utility company, regulated energy utility company. And the starting yield on Duke, 4.4%. So out of my top 10, this one actually is the highest yielder in terms of current yield. 5-year dividend growth rate is 19%. Looking, if they can continue that, looking 5 years out, the yield on cost will be 5.24%. Again, I love this. I love having representation of all the sectors in my top 10, and I love Duke. I've been in this company for a long time. I owned them when it used to be called Progress Energy. Duke then acquired Progress Energy. I own the merged entity now as well. This is a company I have a lot of history with, I have a lot of respect for, and out of all the utilities I own, just did a video on this. This is the one that I respect the most, although it was a battle. It was a really, really close battle between this one and Southern Company, and it was only at the last minute that I was like, hey, not going with Southern, going with Duke. It could have been either of them here, quite frankly, but I like Duke a little bit more. That's my number 6. Okay, this is review. All this so far is this review mode. We're going to get into net new now. So I want to share 7, 8, 9, 10. These are going to be so much fun because I have not shared these before. So number 7 is a company that I have covered here before, but it's been a while. It's not on sale now, just like Duke. Duke isn't on sale either. It's what's so hard about these top 10. But again, picking my top 10 cannot be about value. It cannot be about current value. It has to be about my core. It has to be about quality. And with quality companies, sometimes you really have to wait for them to go on sale. And so the best out of all of these top 6 so far in terms of some kind of value, I would say, is Pepsi. I'd say then just UTX is not even a value, but I'm adding because I got to bring it to size. The rest of them, including Duke, I don't see value right now. I mean, with rising interest rates, and being a electrical utility with a lot of debt, I don't see Duke as a compelling value right now. I think it's going to drop a lot if rates go up more. And I hope for that. I hope for that buying opportunity. I think that'll be really exciting. But that's what's so hard about these top 10. And the next one, it's not on sale either. It is Realty Income, ticker symbol O. This is a real estate investment trust. It's the monthly dividend company. They pay me dividends every month. Current yield, starting yield on Realty Income is a 4.24%. So out of all my top 10, this is the one that is the second highest starting yield. The 5-year dividend growth rate is 21%, placing, if they can continue that, 5 years out, my yield on cost at a 5.15% for shares hypothetically purchased today. Not bad, not that great though. For Realty Income, I sure would feel better with a starting yield around 5% or more. Right now it's $62 a share. I've bought this thing in back down in the 40s. I have to look. It may have even been high 30s at one point. I don't remember, but certainly not the 60s. I'm not buying this thing in the 60s, and so I'm just going to wait. But I love this. I got some real estate exposure through McDonald's in my top 10, but I wanted a pure play real estate company. This is a triple net lease company. Basically what they do is they go out to companies like FedEx, for example. FedEx might own a facility, maybe a shipping warehouse facility, and what Realty Income will do is they buy it from FedEx and then lease it back to them. But what they do in their lease agreement is they sign really long-term leases, and they do it in a way where it's triple net, meaning FedEx takes care of everything. There's no real management overhead at Realty Income. They don't have to worry about tenant improvements, for example. And so you look at Realty Income, there's not even a lot of people that work at this company, but it's a pretty big company because they got scale. And what I like about their portfolio is they have a very high occupancy. You think in the modern day, a lot of traditional retail is failing. Oh, real estate, it's going to be hard hit. At least so far, hopefully this continues. Realty Income, they've done real well. Their occupancy has been good. I think if there's one risk with them, though, is these leases are really long-term. So over time, I just want to make sure that their occupancy stays high, but I think it will based on what I've seen so far. Really, really enjoy this company. And it brings so much diversification, again, because I got healthcare, snack foods, restaurants, industrials, consumer packaged goods, utilities, and now a REIT, real estate. Top 10, really well-rounded, and boy, that's important to have my core well-rounded, representative, and possible to weather any kind of storm that may come its way. So that is number 7. I probably surprised some folks there, but I hinted at it in the last video. I said, hey, I'll tell you, originally I was debating, should Realty Income be number 6 and my utility be number 7 or vice versa. I ended up putting the utility in the 6th position and Realty Income in number 7. The reason I did that is I already have a little bit of a lot of real estate exposure for my number 3, McDonald's. So moving on, number 8. I don't know why this didn't come to me sooner. I did this whole video comparing Clorox to all of their competitors. I own all of them, by the way. I'll link to the video below. But look, I got to do it. Procter & Gamble, come on. I've been talking about Procter & Gamble here on this channel for a long time. I love these guys. I have so many of their products in my house. It's a big company, really stable, not going anywhere. Look, I own all of them, and I did a whole video on it, but at the end of the day, I got to go with my gut. I got to go with my heart. I placed Clorox in a better position because there's a lot I like about Clorox over Procter & Gamble. I'll link in the description below. You can check out that whole video. But Procter & Gamble, it's just got to be there. It's almost funny. 7 through 10 almost came a little easier to me than 1 through 6, just because at a certain point, look, I'm almost done with my top 10, and I'm like, look, Procter & Gamble's not in there. I got to put them in there. They just got to be in my number 10. And so my number 8 favorite dividend stock of all time, Procter & Gamble. Current yield is a 3.14%. 5-year dividend growth rate, 19%. If they continue that 5 years, hypothetical yield on cost will be a 3.75%. Procter & Gamble has recently gone up quite a bit. Thankfully, this is one of my strategic priorities for 2018. Earlier in the year, I bought a bunch of shares. I wish I had done even more, but I'm proud of what I did. I bought before it ran up. Right now, I'm just reinvesting dividends. I don't want to put more money, fresh money in Procter & Gamble now. It's just too expensive. But who knows? It may come back down in 2019. If it does, I'll take advantage of buying opportunities. Until then, I'm buying Kimberly-Clark, actually. I just bought some more Kimberly-Clark today. I'll talk about this in a few minutes. And I'm taking that opportunity to buy Kimberly-Clark now because Procter & Gamble has gone up, but not Kimberly-Clark. So still some opportunity there on Kimberly-Clark. And actually, they're sporting a 3.73% starting yield now. 23% 5-year dividend growth rate, which places them in a 4.6 yield on cost 5 years out. I like that, just from a pure dividend perspective, a lot more than Procter & Gamble at this point. But again, top 10, all about quality. Love these guys. Don't know. It was just so obvious to me that I got to include them. Number 8. So number 7, Realty Income. Number 8, Procter & Gamble. Yeah, there's probably some overlap, Procter & Gamble versus Clorox, but not that much, quite frankly. They do different things. Procter & Gamble's got the detergents, they got the dish soap, they got the toothpaste, the razors, the Bounty towels, the Tide, laundry detergents, so much stuff. And Clorox, they're more about the bleach, they're more about the Glad bags, the Burt's Bees, so they complement each other, but they are both connected in some ways, being consumer non-cyclical, household goods, consumer packaged goods types of companies. So after Procter & Gamble, I'm gonna tell you I didn't include any more of these in my top 10. So you may be thinking Kimberly-Clark didn't make it to the top 10. That said, I'm excited that I bought more today, and I'm going to finish the year strong, but in 2019, I'm probably not going to be buying a lot of Kimberly-Clark because I'm going to be real focused on my top 10 here. It's just how it is. So moving on to my number 9 favorite stock of all time. If you had asked me 6 months ago, 9 months ago, if this would have made my top 10, no. Would have made maybe my top 20, top 15, top 20. But things have changed. Costa Coffee, everyone. Coca-Cola. I love you, Coca-Cola. Back in my good graces. For a while, these guys were kind of out of my good graces. I had some challenges putting them in my top 10 just because I was thinking, hey, do I really need another soda company in my top 10 or another beverage company? I've got Pepsi, number 2. But hey, Coke is coming in position 9, which is a lot different than position 2. And it's a beverage company, whereas Pepsi is, yeah, it's a beverage company, but they do so much more. It's more of a snack food company, in my humble opinion. And so Coke, right now, starting yield 3.16%, 5-year dividend growth 39%, hypothetical yield on cost 5 years out would be a 4.4%. Coke is another one. It's just a hockey stick recently. It's done really well, and so it's not so much of a buying opportunity right now. Again, out of everything I've covered so far, what are the reasonable buying opportunities? I honestly see it just as Pepsi at this point. But thankfully for me, that's the one I want to build the most. 2019, quite frankly, it may be mostly about Pepsi. I don't know yet. We'll see if I'm able to acquire Pepsi at reasonable valuations. That's really important to me because I want to bring it up nearly as big as Johnson & Johnson in my portfolio. So I just got some work to do there, and thankfully out of all these. But looking at the others, I don't know. I don't know. I don't see a ton of value out there. That's okay, though. That's just okay because top 10, again, it's about quality, and sometimes these names just aren't on sale, although a few of them were earlier this year. I'll tell you, earlier this year at one point, Clorox was on sale. I didn't buy any. I missed it. I'm reinvesting dividends on all of these, by the way, but I'm talking about just buying new shares, net new shares with new money invested, non-dividends. At one point earlier this year, J&J was on sale. At one point earlier this year, Pepsi was on a deep discount sale, in my opinion. Procter & Gamble, we all know, was on sale. And so the story here is, yeah, in November right now, these guys are more or less not on sale, but I just got to be patient. I'm just going to be patient, and hopefully some of the volatility continues. And certainly I think there's going to be more corrections at some point next 3 to 5 years, some kind of big correction, if not crash. I think it's kind of hints of it right now that it may be starting. We'll see. If there is going to be a big crash, what I think will fuel it is the government debt and corporate debt, just a lot of debt out there. But time will tell. I like to average in regularly because I just don't know. I average in up markets, down markets. I'm always buying dividend stocks. Anyways, number 10. Okay, this one will surprise you. This, I didn't want to do it, but I had to. I didn't want to place a stock in my top 10 that is a stock I just bought for the first time this year in 2018 just because I don't have enough history with it. But I didn't want to penalize this company either because it's such an amazing company. If you haven't figured it out by now, it's 3M, the makers of Scotch tape. I love this because some of my favorite subscribers on this channel, 3M is their number 1 position. And so I put this at number 10. I just had to because I looked at all my 38 stocks. I'll go in a minute to some close calls, which ones were close calls. But I only had one industrial in my top 10, United Tech. And this is a different type of industrial than a United Tech. But they make adhesives. They make a lot of industrial adhesives and solutions that are used in all kinds of industries. So they're consumer, like with Scotch tape, but they're also industrial. And I just love this company. Why do I love them? Their 5-year dividend growth rate is 114%. So yeah, the starting yield is 2.67, but at 114%, if they can keep that up for the next 5 years, yield on cost, simple yield on cost will be a 5.71. So maybe out of my top 10, if Pepsi right now kind of looks just on a dividend basis like, okay, I'll dip my toes, I'll buy some Pepsi. Again, United Tech, not a great value, but I'm just doing it because it's got to be bigger. It's real small. 3M, kind of small, but it's my number 10, and I just started buying it this year. But I would say 3M, maybe that's kind of second best buying opportunity in here. It's at $204. It was lower. It was down at $185 recently, but $204 still okay. 2.67% starting yield, but with that 114% 5-year dividend growth rate, it doesn't get better than that. So I am really happy that I challenged my assumptions. I challenged my gut, my instincts. I challenged just my way of doing things, which is trust-based. I have to have history. I've been investing in a lot of these companies for a very long time, and especially J&J, Pepsi, and Duke Energy through Progress Energy. This one is new to me. It's new to me because it's always been expensive. I only started buying it in 2018 because I was like, you know what, whatever. I don't care that it's expensive. I'm getting in. And I'm glad I did because I was able to buy some shares reasonably priced recently on the dip. Got some in the low 190 range. So, you know, it's okay. Not a great deep discount, but good for 3M. But anyways, I'm really, really happy I got this in my top 10. So now you know my top 10. By the way, in the description below, I'm going to list all these out, so don't worry, you don't have to take notes. And like I said, at 25,000 subscribers, you'll see the full 38 stock portfolio with percentage allocation to each. If you've been following my channel for a while, you know, quite frankly, all the stocks, or most of them. I think I've disclosed most of them at this point. So, a few things. These top 10 stocks right now make up 40% of my portfolio. Why am I so focused on them? I want my top 10 to be 50%, if not 60%. I like having the rest of them. I like all 38. Every stock is a stock I love, and they all play their role on the team. But for me, I want my top 10 to be 50, maybe 60% of my portfolio. 40 is a little light, so I'm building my core. That's why I'm doing it. I realize there's not a lot of risk here, and I realize there's not a lot of starting yield, and quite frankly, even yield on cost 5 years out isn't that compelling. I think 20 to 30 years out, it's really compelling. That being said, the core, it's like the foundation of my portfolio, and it helps me shoulder risk. It helps me shoulder risk portfolio wide, and so that's why I'm so focused on it right now. Not that I'm scared of any risk or I feel like I have too much risk, but I just feel like I want my core, I want my best ideas to have more money behind them. It's kind of like that. It's just I want my best ideas, my favorite stocks to have more money behind them. I want to put the money into the stocks that I believe the most in, even though I believe in all of them. So that's where I'm at. You may be wondering, Ian, why are there no sin stocks in your top 10? Look, back during the trough of the Great Recession, everything tanked. If you've been watching my channel for a while, you know I bought up a bunch of sin stocks, and I honestly hit the jackpot on them. I got one now that's yielding really high, 20% on cost. And so I'll link in the description below. You can check out those videos. Back then, at one point, this was after actually we bought our first home. I was rebuilding my portfolio. There were times when the portfolio was really centric in sin stocks. It was real focused. It's just not my focus going forward. I'm reinvesting dividends on those, actually for the first time in years, because I think a lot of them are at compelling values. That being said, I just don't see those stocks being in the core. They're just not core stocks for me anymore. Some of them, by position weighting, they're bigger in terms of dollar allocation than some of the stocks mentioned today. That being said, just philosophically for me, a lot of those industries are on the decline. I think they can make up for the decline through pricing power. That being said, in terms of risk mitigation, in terms of portfolio exposure, I just don't need it in my top 10. I don't need it in my top 10, but I value those stocks in my portfolio. They've played good roles in the portfolio, and they've done well for me over the year, but that's okay. The lesson here is just because something's done well for me over time doesn't mean it has to be one of my top 10 favorite stocks of all time. It just means it's done well for me. and it played a real core place. And quite frankly, if you asked me back in 2009, 2010, what are your top 10? Those stocks would have been in my top 10 because that's where I went heavy when I saw the opportunity. But right now, it's just not the same case. And so the fact of the matter is one's strategy, one's top 10 can evolve over time. Maybe my top 10, 5, 10 years out will be different. I don't think it'll be too different, but that's why those ones aren't in there. Now, which other ones were close calls? I'll tell you the close calls. Kimberly-Clark, we already discussed that. Another one, Unilever, close call. Unilever is a really close call because it's an internationally based company, and it's a company that has a lot of international exposure. And so as I was going through my top 10, look, a lot of these companies are very global, very good global exposure, so I feel good about that. That being said, Unilever, I could have easily seen it in the top 10 if I didn't put my Procter & Gamble, but I just could not put Procter & Gamble, so Unilever didn't make it. Another one, Air Products and Chemicals, ticker symbol APD. That one did not make it. It was a close call. I mentioned this one on my videos before. I've never really reviewed it in depth. I will do that in the future so you learn more about this, but I've done really well on this company. The reason I was real close to putting this in my top 10 is it would have given me some diversification in my top 10 in the chemicals industry, but also into a smaller company. The market cap of this company is a bit smaller. If there's one thing I don't like about my top 10 is they all skew bigger. These are all bigger companies except for Clorox. And so Air Products and Chemicals didn't make it. Starbucks is another one that didn't make it. You guys know I love Starbucks. You know I love how fast the dividend is growing. Boy, the 5-year dividend growth rate for Starbucks was 177%. I love these guys. By the way, we're having the first ever PPCE and meetup tomorrow at the Starbucks Reserve in San Francisco. And so we guys got to have it at Starbucks because I love Starbucks. And so they'd probably make it in my top 15. And I'll do my top 15 at some point. But I got to stay focused on top 10 for now. Anyways, they were close. And another close one was Southern Company. I covered that recently in my utilities video. Real close, but Duke made it instead. And so now you guys have it. You know it. Thank you for hanging in there with me. I was really excited to share these top 10. And it was really an evolution of my own thought process over time because I'm setting myself up for success next year as I transition out of 2018. I transition out of my Procter & Gamble, Kimberly-Clark focus. Quite frankly, though, this year was a hodgepodge. I did a bunch of stuff. You guys have been following me. You know I've been buying all over the board. Next year is going to be a little more focused on top 10 and most likely a lot of focus on Pepsi. Maybe 90%. We'll see. I really want to go big on that next year if the value is there. If it's not, I'll adjust and I'll find value within my top 10. What is your strategy next year? Are you thinking about 2019? It's coming close. What was your strategy this year in 2018? You got a little bit of time left, 2 months. Take advantage of those months. Close out the year strong. I bought more Kimberly-Clark. I'm closing it out strong just like I wanted to. I'd love to hear in the comments below. Before I leave today, I want to do a full disclosure. In terms of full disclosure, I own stocks, the stocks mentioned today. I am long on Johnson & Johnson, ticker symbol J&J, Pepsi, ticker symbol PEP, McDonald's, ticker symbol MCD, United Technologies, ticker symbol UTX, Clorox, ticker symbol CLX, Duke Energy, ticker symbol DUK, Realty Income, ticker symbol O, Procter & Gamble, ticker symbol PG, Coca-Cola, ticker symbol KO, 3M, ticker symbol MMM, Kimberly-Clark, ticker symbol KMB, Unilever, ticker symbol UL, Air Products and Chemicals, ticker symbol APD, Starbucks, ticker symbol SBUX, and Southern Company, ticker symbol SO. Wow, that was a lot. I'm long, I own all of those stocks in my personal stock portfolio. In terms of a friendly disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. This video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult a licensed financial advisor first. Literally just sharing my journey here on YouTube for fun and entertainment. If you're going to go out, invest, again, seek the advice of a licensed professional. Before I leave today, I just want to thank you for your support, for the subscriptions, everything. If you want to thank me, you want to say, hey, Ian, I really appreciate what you do, please subscribe, like, comment. All of that means the world to me. And check me out on Instagram. I share a lot of cool stuff there. And with each of my Instagram posts, I usually have a little story that gives background, so you can learn all kinds of investing and life insights over on my Instagram. I'll link in the description below. Hey, everyone. I will see you in the next dividend investing video. And I look forward to seeing those of you tomorrow, Friday, at the Starbucks Reserve in San Francisco. We are going to have a good time talking about dividend stocks. Hey, thanks everyone.